基本法確保咗一國兩制可以行穩致遠，令香港保持獨特地位。
低稅率以及健全嘅基礎建設，亦都令到香港有非常之好嘅營商環境。
香港完善嘅法制，令經濟穩定繁榮。
國安法令社會安定，自然更有利營商環境啦。香港同祖國緊密聯繫，亦都係中國一個面向國際嘅窗口。呢個地位可以話係世界上獨一無二。
基本法第115條保障咗我哋嘅貨物、無形財產，甚至係資本嘅流動自由。
無論係內地或外地企業同香港公司合作，就係雙贏。
我哋香港人有國際視野，產品融合中西文化，靈活運用兩地嘅資源同埋優勢，能夠創造出更加高嘅價值。
做初創有政府支持好重要。我哋喺2016年加入咗數碼港培育計劃，幫助我哋發展得更加成功。
我相信完善嘅金融體系以及法治係非常之適合我哋喺香港建設我哋嘅業務。
喺基本法嘅保障之下，香港喺大灣區開發之中擔任重要角色，可以見香港嘅年輕人機遇良多啊！
Ladies and gentlemen, welcome to the HKTDC Entrepreneur Day 2022. The session T-Chat Global VC Investment Rise or Fall will soon begin. The session is conducted in English. Simultaneous interpretation in Cantonese and Putonghua is available. For physical participants joining us here, please get a headset at the reception. You can tune to Channel 1 for Cantonese and Channel 2 for Putonghua. For participants joining us online, you may select the audio channel below the video frame, and you are also welcome to raise questions through the Q&A box. Selected questions will be asked at the Q&A session towards the end. Before the start of the session, I would like to invite you to indicate your views towards the global venture activity in 2023 by scanning the QR code on screen. So, do you expect it will rise, remain stable, or fall in 2023? Please scan the QR code to indicate your view. So here's the result. So without further ado, the session T-Chat Global VC Investment Rise or Fall will now begin. Let's welcome Mr. Eric Manlunas, founder and managing partner of Wavemaker Partners, who is a two-time startup entrepreneur turned venture capitalist and has a proven track record as an early investor in over 400 early-stage startups, to share his insight towards startup investment. Hi, Eric.
Hello.
Hello, the floor is yours.
Okay, thank you for those attending, both online and offline. I'll make this very casual and talk about some of my thoughts and some what we're seeing out there in terms of venture capital. Wavemaker is a global venture capital investor. We cover both the U.S. and Southeast Asia. So happy to share some of the thoughts that we're seeing out there. So we definitely live in interesting times. I think that's the understatement of the year. Lots of geopolitical uncertainties, lots of inflation fears, lots of cost of capital increasing across the board, given that all the central banks are increasing their respective interest rates in their respective markets. So given that as a backdrop, there's been lots of uncertainty, and this is certainly a bit unstable from a macroeconomic perspective. However, venture capital, in our opinion, in my personal opinion, is a bit different from a typical asset class. People who care about venture capital understand that there is a social utility behind venture capital in general, especially early stage venture capital. It certainly catalyzes innovation, and it certainly leads to new inventions that lead to business formations that eventually lead to better standards of living. So that as a backdrop, I don't think I agree with the survey that I believe venture capital will remain stable for this coming year and probably for the next few years. That's not to say that there's not going to be any challenges along the road. There's certainly going to be a lot of difficult decisions that need to be made. A lot of companies that have that are still trying to figure things out in terms of product market fit, in terms of go-to-market strategies. We'll have to navigate this space, this challenging space, and would have to be really versatile and practical in terms of their decision making to make sure that they can go with the flow and be able to navigate through the difficult period. That said, we at Wavemaker, what we've been doing is we've maintained our investment cadence. We're fairly conservative with the companies that we've been investing in, and I realize the word conservative is a little bit of an oxymoron when it comes to early stage investing. But what I mean by that is, unless we can see a business model for it, unless we can see a sustainable business model, we typically don't touch it, which is why we've mostly concentrated on enterprise investing, a lot of software, enterprise AI, and a lot of sustainable business models out there are stuff that we've historically funded. And really, the bottom line for us is we're looking for entrepreneurs that have unique insights, that are trying to solve really significant pain points in the industry. And what we mean by those is we're not trying to follow certain trends. We don't do consumer investing for that particular reason, because we think it's somewhat trendy. We think it's somewhat it's somewhat cyclical. We'd like to invest in software companies that have predictability in their revenue streams and really solving a real meaningful pain point. So in terms of our investment activity in Wavemaker, we've maintained the level of cadence that we've had for the last 18 months. We have been averaging probably one investment a month, and then probably a little bit more than that if you include our follow-on investments. But because Wavemaker is both an emerging market investor, i.e. Southeast Asia, and also a US investor, we're seeing a lot of differences and a lot of similarities, of course. There's no doubt that deal activity has slowed down and the US side, and also to a certain extent in Southeast Asia. While we've maintained our investment cadence, we have sort of raised the bar, and whenever we have to decide or whenever we make decisions on new investments, and also have raised the bar further higher when it comes to follow-on investments. With deal activity slowing down, a lot of companies are not able to raise capital as easily or as less challenging compared to previous years. So that's a big challenge for some of the portfolio companies. So we just make sure that our companies actually have sufficient runway to make sure that they can go through the cycles. Just like any storms, this storm shall pass as well. And we just want to make sure that our portfolio companies have sufficient running room and sufficient resources to be able to navigate through the challenges. As I mentioned earlier, a lot of the global factors are really affecting a lot of the investment decisions, a lot of the way the companies behaved, a lot of the way the companies make their own respective capital allocations. And rising interest rates and inflation are certainly not helping those things. In terms of the cyclicality of venture capital, it's been said many times, and I think there's enough anecdotal evidence out there. It's enough data out there that a lot of the durable long-term leaders that have been built out there were built during downtimes. So we're fairly confident that we're going to see a lot of entrepreneurs going out going out there building their own respective companies because they believe they can solve they can do certain things a better way, and they believe their solutions they're building are quite important for the industry pain points that they're trying to solve. And I think we're going to see, time will only tell, but I think 5, 7, 10 years from now, we will look back at this time frame and see that a lot of interesting and a lot of important companies would have been built around this time frame, I should say. Lastly, predicting the future is very difficult. We don't have any batteries in our crystal ball, but we remain very bullish. As I mentioned at the outset, venture capital, especially early stage venture capital, is somewhat different than your mainstream asset classes, and because of its social utility, I believe it will remain fairly active. I think stability is what we're looking for, and as I mentioned earlier, I agree with the survey that I think it will remain stable. There will be pockets of slowdowns, especially in other parts of the world. But I think Southeast Asia, given all the force multipliers and given all the dynamics around it, will continue to thrive. And the U.S., given that it's really the ground zero for a lot of innovation and really the largest market for venture capital, will, I believe, remain fairly robust in the years to come. So I'll stop right there, and maybe we can transition to the panel.
Thank you, Eric, for your insightful sharing. Please stay online as we will now move on to the panel discussion session. And may I now invite the Honorable Duncan Chiu, Council Member, Innovation and Technology of HKSAR Legislative Council, and our moderator, Ms. Karena Belin, co-founder of AngelHub and WHub, to join us on stage, please. In the meantime, have you changed your views after hearing Eric's presentation? Please indicate your views again towards the global venture activity in 2023 by scanning the QR code on screen.
Great, fantastic. Welcome everyone to a very, very sunny day here in Hong Kong, and welcome to you, Eric, online. I think actually at this point in time, we were encouraged to ask you for another poll to see if the first introductory words from Eric helped you to already change your mindset a little bit. So you should be finding, I think, here on Pigeonhole, right, another, I am actually the one who has the pleasure to launch the second one. So please have a look at the second poll and see, maybe we can put it on screen here as well. Did anything change after, Eric, your first introduction? Were you able to make people more confident to look into the investment scene here, more doubtful, or does everybody actually confirm your hypothesis that it will be remaining a little bit more stable? I don't know if the team wants to flag the results. We have the results here. Okay. Oh, wow, Eric, I think you did an amazing job. So if people feel way more comfortable now after the first few thoughts from you. Actually, I'll just build on with Eric at this point in time. And again, please all be encouraged to raise your own question over Pigeonhole as well. So tell me, Eric, I think when we look actually into investments, we very often obviously look at the targets, right, the startups. But give us a little bit your sentiment about the VC ecosystem in itself. What do you see? And there might be some nice differences between the West and the East. But are we looking that the VC ecosystem is changing? Is it more concentrating? Is continuously, new capital, new VCs, new interest in the space emerging? At AngelHub, we're always very, very happy to bring new people into the scene. Tell us a bit more about the investor side.
Sure. The venture capital ecosystem has certainly changed quite a bit. I started Wavemaker close to 20 years ago here in Los Angeles, where I'm sitting in right now. Back in 2003, the landscape, the ecosystem was completely different than what it is today. And what I mean by that is there's a lot more participants today. There are a lot of younger, very intelligent guys and gals going into the space that bring their own perspective, that bring their own experiences from a company building perspective and from an operating perspective, from a large corporate perspective. So In my opinion, the space has gotten much larger. There's more capital playing around the space today, and that all bodes well for entrepreneurs. I'm not the type. I welcome all kinds of capital into the ecosystem. I think the more capital, the better for a lot of entrepreneurs, because entrepreneurs need resources to get started. They need a lot of help from angel investors, early stage investors, mid stage investors, late stage investors to really jumpstart their ideas and make their dreams come true. And as I mentioned at the outset, venture capital plays a different role in the whole ecosystem in terms of it's an asset class. It has a lot of social utility to it that leads to better and more innovation into the system, which makes society a much better place. And so, if my most obvious observation from 20 years ago, or close to 20 years ago, that the space has gotten a lot bigger. I think it's a lot more understood now. 20 years ago, venture capital was still somewhat of a cottage industry. It still is compared to its cousins in private equity and public equity. Venture capital is still relatively small compared to those other asset classes. But it's gotten a lot bigger, wherein thanks to the media as well, it's been glamorized, it's been romanticized, and as a result, it's much better understood from the time we started Wavemaker close to 20 years ago.
Yeah, how would you explain though the dip in VC investments? I mean, obviously 2021 was a great year, and with huge differences by sector. Definitely Web3 played a big role in boosting it. Probably now playing a big role as well in terms of letting it a bit slow down. But is it, as you mentioned before, you know, the cottage industry, the really smart guys, the smart capital, how are they reacting? Are they just focusing back and scaling down and just making sure their portfolio companies survive? Do we see, you know, people that dip their toes now going back out and say, oh no, this is not for me? Again, what do entrepreneurs need to be warned or encouraged to versus, you know, who to pitch to?
I think it's all of the above of what you just said, right? Given the uncertainties out there, given all the with what seems to be some really strong economic headwinds, people tend to slow down a little bit. So that explains the drop in deal volumes. That also explains the drop in dollar sizes. So, but I believe it's all temporary, because once people get stabilized and people get used to the environment, people would get a little bit more comfortable again. So I think it's a knee-jerk reaction of all the bad news that's been coming at us for the last 12 months, and people have decided to just slow down. In our case, we've raised our bar a lot higher in terms of the requirements of a first check, and also further raised the bar in terms of our follow-on checks. So in terms of your other question, in terms of, you know, what should entrepreneurs be aware of and what they should guard against, and what we've advised our entrepreneurs and founders is just make sure you have enough running room that you can last 12 to 15 months out there. And if you're getting below the 12-month threshold in terms of your gas tank, try to go back to your cap table and raise internally, as opposed to running a new process and racing in externally. Because everybody, not just us, but everybody's raised their own bar, and raising capital has become a little bit more challenging compared to maybe even 12 months ago. So I think that really speaks to psychology, that speaks to sentiment, that speaks to the mindset of investors right now, and just making sure that their own portfolio companies are in good shape, make sure they all survive, and therefore they've slowed down new checks and new investments just to make sure that their housekeeping itself is in order before they start deploying large capital again.
Great, thank you. I'll come back to you and grill you a little bit more on a few points. I think there was a lot in there, very, very helpful. But you talked about sentiment, so I want to bring Duncan into the discussion. Duncan, you have been actually a great supporter of the Hong Kong and Greater Bay startup ecosystem for decades, I guess. I'm not going to age you too much, but now actually, you know, joined the Legislative Council. What is your sentiment? How have you seen the scene evolve, and obviously particularly through a few crises we have been through here.
Thank you, Karena. And I think I agree a lot with what Eric mentioned, but I think Hong Kong is a mixed scene, comparing to the US, because in Hong Kong, possibly we have investors from different region. We have investors from the US for more mature company, and I think a lot of the local company, they rely on a lot of the local investors. And of course, mainland is another source. So I think we have a mix of funds, and the sentiment in different regions are actually different. I think Eric mentioned that's very much in line with what's in the US, but I think China is maybe a different case. China actually, I think the VC scene slowed down a bit earlier before what's in the US. A lot of the fund in mainland also sort of backed by government investments or government LPs, so that actually slowed down quite a bit. And in Hong Kong, I think a lot of our investors are all in earlier stage investments. I think there are more angel investors than very late stage investors in Hong Kong. So I think with a mix of these environments in Hong Kong, it makes it a bit different. So I think like what Eric mentioned, I would say that we still see companies in more mature stage raising money without, I wouldn't say too much problem. Of course, it's not as easy as before, but funds tend to pile on their further investments on previous portfolio companies, like what Eric said. So that's what happened, I think, in every storm. People will keep their investments into better portfolio company that they invested, extend the runway, and also great company. We always say are made during downtime, during crisis, because there's less competition, and company that really work on cash flow but not customer acquisition will survive. So post every crisis, you see really great company were being made instead of during good time. Only company know how to raise money, they become unicorns, right? But it's not on execution that they're being tested. So I think in Hong Kong there are a few things. So we have to see how the trends move forward. Let's say from the US funds, I talked to a lot of our friends. I think they're very much in line with what Eric said. There's still money there, a lot of fund they have in uninvested capital. Dry powder is there, but then they will be more conservative. They tend to invest further into the companies that they have invested before. Maybe not too much into so early stage companies. So it will be difficult for really early stage startups to raise money in this time. And also I talked to some US funds, and with the China-US political situation is sort of another concern. I think most of the funds I talked to, they are mainly commercial. They only look at deals that actually worth investments, but there are also a number of those that they said they take a wait and see attitude on how China and US relations pans out. And that's also another factor. And locally, I think it's all sentiment in the economic and interest rate issues that making things a bit slow down. So generally, but I think longer term, I'm also very positive. I think post-COVID, we know there's a shift in mentality, not just in Hong Kong, but also in mainland, with the central government's obvious direction on building a technology strong nation. I think Hong Kong also will put more focus into the tech scene, and also government come in at the right time. We just have the policy address came out in October. That included something that we have strived for a long time. That is the government-led sort of like a sovereign fund to invest locally or encourage early stage investments. So the government, the financial secretary put in a 30 billion Hong Kong dollar fund together with some other funds that he's announced before. So that will be a new Hong Kong Investment Corp. So the whole purpose for that is to encourage, I think, professional funds and a company with potentials, unicorn companies, tech companies, to come to build in Hong Kong. So I think amid this situation, the government fund will come into helpful.
Right, and let me just unpack maybe or go a little bit deeper on 2 points. So on the one hand side, and I fully agree actually, Hong Kong early stage investment and then really later stage investment up to, one of the most beautiful stock exchanges globally here, wasn't really always the biggest pain point. It was really in between. I mean, one of the reasons that, our platform actually exists is to bridge exactly that gap. Aren't you worried that people who started dipping their toes into startup investing are a bit scared now, particularly in Hong Kong, where again we were a little bit on a catch-up, right, movement to make that happen and reorient people to diversify their portfolio, not into only traditional assets. That's one part of the question. The second part, again, which is I think very much linked, is the geopolitical interesting times we live in. Don't we think that Hong Kong has the most beautiful value proposition, again, to bring, Western and Eastern talent, money, solutions together? And the concrete question is, what do you think the government is doing, or the private sector is doing, to really seize these two opportunities or work against these two risks?
I think the first question first, I think, Daphne, I agree that private money would do better job in selecting investments. That's I always concur. Looking at startup regions that are grooming all these great companies in Silicon Valley and Shenzhen. The private investments account for a big chunk of the investment amount into startups. So I think Hong Kong, one thing is we don't have a mature professional investor base yet. All these great places, you look at Silicon Valley and Shenzhen, they have people, entrepreneurs that really, they do tech company and they exit, they make their fortune, and then they become investors. And they know who are the good people, who are the tech-savvy people, who is the best team I have to invest into. But Hong Kong, most people made their fortune from property, maybe finance. And, most of the family office of private money in Hong Kong, well, they invest into tech when the trend is there. When everyone is talking about tech, they start investing. But they didn't expect, actually it takes a long time. And it's different from property, how you pick a company, how to pick the right team. So the thing is, we always see, Hong Kong become very enthusiastic about tech investment on the good time. But when you have storms and crisis, people just went away and say, okay, I put my money back into stocks and put into property investments. And then good company doesn't get money at that time, doesn't good investment capital. So that's why we need, government to come in. We should not be always relying on public investments, but public incentive to promote more private investors and professional investors, that really people understand how to pick, the right investments into town is something necessary. So I think we bridge the gap here because we don't yet have a lot of unicorns exiting and people become billionaire and then they will, okay, I look into the next batch of company in Hong Kong. We have some, look at DJI, the founder, right? They actually invest in dozens of companies in Hong Kong. So I believe people that made the fortune in this region in tech, they will come back and put in the investment into the next batch of company. So I think now what the government coming out is trying to bridge the gap and bring in more investments, like the platform like you guys also helping a lot in bridging the gaps between investors and companies. So I think things are happening. Just so happen, the financial crisis, I would say, or the China-US frictions doesn't come in at a good time, when we're at the peak of building all these and then you take a downturn on that. So I think that's possibly replying to your first question, and I forgot the second question.
No, it's okay. Actually, no, I'm just going to go deeper on that first question. And actually, on the second, I'm going to pull you, Eric, in as well in terms of what you see, where the money flows geographically speaking, right? And I'm not going to make that only about Hong Kong and the Greater Bay Area. It's always right, and we love the bridges with Singapore and the other Asian hubs. But coming back, I want to challenge you. At the same time, yes, there's tons of books out there about describing Silicon Valley, and the short version is indeed geeks becoming successful, making money and reinvesting into geeks, right? But I think that the network effect, arguably, is much more deeper than just successful entrepreneurs. And their whole theories about the role that venture capital actually played, right, in nurturing this talent to get to that success. I think my question is a little bit, are we just too bad in terms of marketing, in the sense that, to your point, right, there are tons of amazing examples, right? Nearly 20 unicorns in 5 years, 7 million people is quite an impressive number to track. And some of these unicorns are not just $1 billion companies, right? They're global leaders. Take DJI, take SenseTime, take Animoca Brands. I mean, even, you know, BitMEX was the largest exchange before they had to, exit a few geographies. So is it really, do we need successful entrepreneurs to reinvest and wait until that happens? Or what can we do actually to nurture the confidence in the scene here for more capital from Hong Kong? Because I would argue the network effect we clearly have on the capital side.
Yeah, I totally agree. The network effect. I think one great company builds by talent. So number one thing, the network effect, we have to keep attracting talent in town. You know, look at the companies that we have now. You know, the few fintech company you mentioned. Well, it took them what 5-6 years when they came to Hong Kong and built a company. And you know, talent attract talent. You know, when they come in here, they know where to hire people from outside of Hong Kong to bring in the right team and work here. You know, look at Animoca Brands now. You know how many people they bring in from outside of Hong Kong. All this talent in the Web3 scene. So I think we have to build on with our story of short history of promoting startups, which is less than 10 years in Hong Kong. I think Hong Kong have the attractions to all these talents globally. I remember the time 2016, 17, we went to UK and US with TDC. I think when we first announced Hong Kong gonna invest, or the government is being open for fintech, I remember all these people from London or from LA, Los Angeles, and San Francisco we went to. They all were inquiring, you know, what we can do in Hong Kong. Number one, we understand there's a lot of investment opportunities in Hong Kong, and second, you know, the market in mainland. How can we bridge into the market in mainland? I think there are still good things that we can use to build to attract startups and talents in Hong Kong. But of course, one thing we need to do more promotions, and I think people all around the world still have question marks, you know, whether Hong Kong can be a tech hub in the region. But I think that really takes time to build, and we need to really tell about our successful cases. I've been, you know, previously, my past life is in investment. So I've been doing VC investment for 20 years. So we do look at deals in the US, Israel, and of course, mainland China. And, you know, there are companies still come to visit me. Even I tell them, oh, I'm not involved in investment decision anymore. But I think there are some companies somehow outside of Hong Kong, you know, they raise huge amount of money, especially some in mainland. And I look at the business model, I think it just doesn't work, right? And there are companies a lot better here in Hong Kong where they're struggling to raise a much smaller amount of money. So we should let them go out more and actually do more promotion on our ecosystem as well.
Great. Actually, let me take the tangent on the talent, because I think it obviously leads up then to the question that I had again about investment. We say the money goes where the talent is, right? And Eric, you mentioned that arguably for an investor, nothing as good as a good old crisis to assess the agility of entrepreneurs, top line, but also bottom line stewardship. So where do you hunt for talent? Let's dig a little bit deeper in terms of where are the big pockets and where is growth coming? What do you see?
Well, in our particular case, our Southeast Asia practice has gotten bigger the last several years. And so there's a bit of a geographic mandate to that, to the funds that we've raised specifically for Southeast Asia. We're out of Singapore in this particular case. So we are constantly hunting for talent with our existing founders. Founders know other founders, entrepreneurs know other entrepreneurs. And so that's a good place to start. We're also constantly looking at non-obvious places, such as, you know, corporations. Sometimes there's always an entrepreneur hidden in that big stash of people out there that don't seem to be entrepreneurial, but just looking for a reason and looking for a catalyst to get out and actually start his or her own business at some point. And we like those unique insights that come from corporations because they've seen the problems firsthand, and they've seen some of the solutions don't work, and therefore sometimes they do have their own unique insights that they can create a better solution. Obviously, we're also looking in the university system. We're trying to get to know a lot of potential interns for us, because interns know other younger people that are interested in starting businesses. Some of the interns that we've had from the university system have always been interested in venture capital, but not necessarily starting their own startups. But those kids, I call them kids because they're really young. They also know a lot of different entrepreneurs. So we're looking in all kinds of places, and we find them in the weirdest places. And it's always good to start from a basis of an existing relationships, but sometimes you kind of have to start relationships from scratch.
And if you would have to draw a map on kind of like trying to identify a fortes or strength in certain areas, geographies, with regards to technologies or industry verticals, right? Because obviously, I think one of the biggest pitfalls is to talk about the startup scene and venture capital as a total, because we have huge differences, right, by technology industry. So if you would draw a map, particularly, let's start with Southeast Asia. Where do you see hotbeds for what type of verticals and technologies?
Well, Southeast Asia is a bit tricky, right? Because it's a marketing construct. It's lumped as one market, but it really isn't. It's very, very different. The 10 different ASEAN countries are very different from each other. Different currencies, different cultures, different languages, etc. So for startups to succeed, they have to localize quite a bit. That said, you have to look at the population centers. The main population centers are Indonesia is obvious, given they have 260, 270 million people. The Philippines is catching up pretty quickly with 110, 115 million people. Got Vietnam that's rising pretty quickly as well. So if you go to large population centers, you're talking about large targetable addressable markets. So large TAMs typically are places where you can find companies that can scale pretty quickly. So that said, Singapore is the most stable from a legal perspective and from a financial perspective, and Singapore tends to attract a lot of expatriate talent. So Singapore, in spite of it only having less than 6 million people, it's still a pretty major source of talent in the region, only because it really can attract a lot of talent from all over the world, not just from the region, from Europe, from North America, and everywhere else. I believe the last count that we've had is we've had 41 different nationalities of startups that we've funded across the region. A good chunk of that are sitting in Singapore. So I think you just have to, if you go to large population centers, it's very difficult to be wrong in terms of looking for talent in those places.
And you're mostly focusing, right, on like ESG focused solutions, right? You talked about enterprises. So typically, I think that's the one where you said, also Singapore has an interesting value proposition. What about some other areas, Web3, FinTech, Deep Tech?
Yeah, FinTech is something that we're constantly hunting for. Payment solutions are a must in all the markets in Southeast Asia, especially the ones that have rising middle class, such as Indonesia and the Philippines and Vietnam. We don't do much Web3. We're mostly Web3 curious at this point. We've done one or two investments here and there, but we're not big. We're not big in those. We're really focusing more on enterprise solutions. A lot of deep tech, AI, and also beginning to look at sustainability solutions out there. We do very little consumer. There's a lot of money chasing consumer deals. We don't think that we necessarily have a unique competitive advantage on that side of things. And so for those reasons, we've shied away quite a bit. But those are the things that you see in Southeast Asia and even in Hong Kong, lots of consumer facing companies that are getting, or at least from 12 months ago, getting lots of funding. And of course, things have slowed down quite a bit since. And I think there's going to be a consolidation happening here for the next 12 to 24 months.
Yeah, but congratulations, by the way, for Wavemaker Impact. I think you announced your first close. So particularly for companies, right, in the sustainability area, climate tech, right, should
Yes, thank you.
directly get to you. That's a little the entrepreneur at heart that speaks here, just to give some good tips and advice for the entrepreneurs in the room. So make sure you get Eric's details. He needs to deploy that capital now. Duncan, again, coming back to the talent piece, I think where do you see the forte of Hong Kong, again, from a talent point of view? We talked about being very international. Any specific sectors? I know the Hong Kong government had, declared specific sectors that they want to focus on.
Yeah. I think, the good thing is for this time, I think we are picking the tracks, right? 选菜道. So we're picking the tracks in Hong Kong. The government announced four major areas. I think we also did from consultation with the industry stakeholders and gave suggestions. And these are fintech, biotech, or life tech, life science related, and then precision manufacturing, new energy, etc., and AI-related digital economy. So I think the few things that we pick, I think one thing is we finally made our stance on particular area we have the back, but not generalize all tech that we have to support, because really, like Eric said, some region they are better for some kind of technology. Enterprise software, the gross margin is highest in the US with all the regulations and stuff, but in mainland it's terrible. Look at enterprise software and middleware. So I mean, smart devices, if you have Hong Kong and Shenzhen, actually I don't see anywhere in the world can beat us. If we have good design team, the whole supply chain is in Shenzhen. So these are something we have to focus in which track we are picking to run. So, I mean, the four things we all mentioned after deeply consulting the industry stakeholder is things that Hong Kong can do are really not just technology itself, but also tech with something that need professional guidance, that need certifications, that need trust in the technology. So things like fintech is not just technology, it's not just innovator says it all. You still have to comply with international regulations, governance, compliance, and all these things. It's not just like, okay, I want to come out and do something new and kill all the banks. I think we passed that time. So I think these are things that, you need trust alongside with tech skill sets. So these are the few things and areas that I think the government come out and say, we want to promote more companies here, more talents here. And also I always share with friends that the mindset of our startup entrepreneurs have also need to change as well. Because I think the short sentence I said is from application to creation. I think previously too many innovators and entrepreneurs in Hong Kong, they're focusing on application, so whatever is, doing well outside of China and Hong Kong, do the local version here, or take some licensed product here and do customizations in Hong Kong and sell to government and, do a startup, but possibly it's more like a system integrator than a creation of a new technology. So I think the focus is also on investing more money. There's another 10 billion announced from the government, the One Plus, which is investing into bridging the R&D from universities into being a product itself. So I think the whole focus is getting more into not just on application side, but on research, development, and commercialization, getting our own product out from Hong Kong. So then, looking at, we have a list of 18 unicorns in Hong Kong previously. Of course, some of those, they start outright in mainland. They maybe graduate from Hong Kong and then they start a company in mainland. But, out of these 18 unicorns, you can look at them, more than half are university groomed technology. And they came out with years of research from universities, and then they built a company. These are like the Sense Time, the DJI, the SmartMore, and a few, in mainland, in Silico, Fourth Paradigm. These are all university spin-off, and then they go to mainland, and they become unicorn. I think these are the things that we are encouraging or promoting from the government's policy address, that there will be more investment power from the government. And of course, that money possibly, I think it's not announced yet, possibly they will use to entice more private investors to help in selecting the right company and the right talent, the right team to put the investment into. That's what I'm anticipating.
No, absolutely, and we'll get to the crystal ball questions in a second, sorry. But there were a couple of things, again, just to highlight to make sure that is really well captured by the audience. So on the one hand side, there are a lot of support that is available, right? And I think actually Hong Kong TDC has their own website and portal to help you and guide. And I think the Hong Kong Productivity Council is actually very, very active also on helping you to really make these dollars arrive in your bank account. So that's very, very encouraging and very important. I think the other thing is you mentioned about fintech, right? And again, Fintech Week here in Hong Kong was again a way also to establish and clarify that, particularly in that area of Web3, right? The government is really looking forward in terms of driving clarity around different areas, be it digital assets, be it CBDCs, and again, clarifying that, you know, in Hong Kong, it's one country, it's two systems. So here we have the legal framework in place to become a leading digital asset and Web3 hub.
Yeah, let me jump in a bit on that.
I
think I forgot.
To throw the ball.
Yeah, thank you, Karena. Thanks for reminding. I think I have to you know, clarify a bit on the announcement as well. I think it's a good thing. I told Karena last time when I meet you, I was surprised that you know, government announced something like that. It's very adventurous, and we actually giving confidence to people that this government is willing to try new things and back on the future of technology and innovations. I think with the announcement saying that, you know, we're gonna have consultations on retail investments on digital assets, of course. Don't relate digital asset to just crypto. You know, that's what a lot of people would do. Digital asset is a lot broader than crypto. But I think with that announcement, you know, I think people in the Web3 or related industries are actually very encouraged to see that I think the government also make it clear that to make the stance that, you know, we all believe that let's say digital assets are here to stay, and now is only the early stage. We should come and explore the opportunity of that. And Hong Kong being the wealth management center, financial center globally, we should explore more asset class or things that may happen in future. So I think this is a very different mindset from what we had before, that, you know, wait for all other countries to legislate and define, you know, how to define this asset class before we start to look into it. So now we can say we would come out and see, okay, we'll try an error, you know, maybe see how things develop in this area and legislate in some form how to have people's investors participation in that. And the consultation, I think will be out soon, and possibly in the next few months there will be discussion on that, and maybe some regulation changes that will allow more Web3 investments into the region in Hong Kong. So I think this is happening very soon. I think FinTech Week, that's the big news that we have. And I personally, I think Web3 has a lot of potential. This is like actually internet 20 years ago when we just had Netscape and you know, we wait 30 minutes to get online. So I think there's a lot we can explore in that, and that's another way we can attract talents working on that into Hong Kong.
Absolutely, and just a little bit of a shameless plug, but again, if you want to demystify a little bit, we have a few white papers on AngelHub that clarify what it is, and actually by making that piece on education, we realize, again, not only from a talent hub, we talked about Animoca Brands already here, one of the global leaders in Web3 being headquartered here and born out of Hong Kong, also in terms of adoption, right? We're leading in terms of NFT adoption, right? So again, there are a few things to come. Now, getting towards a little bit, my question about, interesting times and geopolitical environments that are, as you said, the least to say, very interesting. Cross-border, I think, is something, Eric, that was always dear to your heart, right? So where do you see this evolving in the future? Are your portfolio companies staying way more local? What are you trying to help them to leverage and realize this dream where we say in the tech world, well, technology is without borders?
Well, every time we once in a while we remind ourselves why we started in Southeast Asia. And I think 10 years ago when we started in Southeast Asia, there were 5 major trends that we saw that are still in play today, 10 years later. And we believe these 5 factors and forces will continue to be in play for the next 10, 20, even 30 years. And to kind of give more context, what they were we thought that the rising middle class will continue growing, and that's not going to stop anytime soon. And we thought with that rising middle class, by the way, all these have the common denominator for all these factors that we saw 10 years ago. We thought that they were all force multipliers. And anytime you have a lot of force multipliers in a market, things tend to work your way, and that typically translates to a lot of tailwinds as opposed to the economic and political headwinds that we have today. So number one was we thought that the rising middle class will continue. And I think that's very, very that's still very true for Southeast Asia today, especially if you look at Vietnam and the Philippines. Number two, and this is also very common across the region, was there was a huge housing backlog anywhere you went in Southeast Asia. Now, housing. When you think of housing, you don't necessarily think of housing startups, or there's not a lot of startups there. There are a lot of solutions that are trying to innovate the way they build houses. But the way we looked at it was housing backlog creates a huge multiplier, because there's a lot of things that happen when you have housing backlogs. And when you start having housing, which is basically household formation, furniture, appliances. And again, we thought those force multipliers will create a really healthy ecosystems for entrepreneurs to figure out innovative solutions to be able to make those old processes more streamlined and more innovative. The other factor that we saw 10 years ago, and it's still the case today, was huge infrastructure backlog. And we're big fans of streamlining infrastructure, because infrastructure really creates a lot of productivity and unlocks a lot of productivity, because it streamlines a lot of different things. And we thought that that's going to be a huge force multiplier, and will create a lot of economic tailwinds if the governments across the region can solve for that. And of course, if you look at the fiscal situation of all the countries in Southeast Asia, they're much better than their counterparts in developed markets. As weird as that sounds, I think I trust some of the fiscal situations in Southeast Asia than I would trust the EU or the US's fiscal situation. That's a whole different conversation, much longer conversation. But we thought that the fiscal position of the countries were great. Therefore, that creates a lot of stability, and stability creates a lot of prosperity. And last but not least, we really believed, and we anchored our belief on the demographic dividend. It's a very, very young region. I think the Philippines average age is 25 or 26. Indonesia is not much older. Vietnam's similar. So with that demographic really rising, it all ties to the first 4 factors that we thought we saw. And so we just thought that there is nothing but downside in this. There's nothing but upside in this region. You just have to have the right investment horizon. You just have to have the right stomach for risk, and good things will happen over a 10, 15, 20-year period. And I think our first 10 years, that we've proven that. We've proven that to our LPs. We've proven that we can find companies that could exit, that could be acquired by strategic buyers outside of the region. We've sold companies to large software companies in the US. Intuit is one of them, Facebook, Microsoft, etc. So we anchor our beliefs in the region today based on what we believed from 10 years ago. And we're just, I think we got lucky that we looked at the region. It helped that I was born and raised in the Philippines, so it was near and dear to my heart to try to do something in the region. And you know, not I don't have any batteries in my crystal ball that I can predict the future accurately, but I'm willing to put everything on the line that the next 10 to 20 to 30 years that there's going to be nothing but upside in Southeast Asia.
Well, that was a very beautiful answer to actually the first question, which was raised a little bit differently from the audience, but which was actually kind of the question, do you believe in Asia continuously blooming and booming? There's another question from the audience, and thank you very much actually for addressing them. I think it is a little bit more geared towards Duncan in terms of, do you see a trend of Chinese and Hong Kong companies going global for business? Do VCs like it, and how can they get support from VCs? So thank you, Ricky Tan, for asking this question.
I think it's a must. I think for China mainland company, most of them, they come to Hong Kong not for Hong Kong market. It's only 7 million people. So you can see all mainland, not state-owned, but also private company come to Hong Kong as a headquarter going outside. Of course, there are also some in Singapore recently for Southeast Asia expansion. But I think the first station for going global is definitely Hong Kong. And I think also with the practice that we have, the legal system, the compliance from Hong Kong side, that we can be aligned with, especially for EU, you know, a lot of these, if you're in doing banking or fintech related, biotech is one thing that we think why government put the emphasis on it. We've seen many bio-related company, pharma company, they come to Hong Kong and inquire on building the base here. That's because of the connectivity to Europe, a lot of the medical standard, and also with the FDA connectivity. So I think these are areas that I think we still have the strong end, you know, with mainland company, and especially mainland company come to Hong Kong, you know, they culturally, you know, language, everything is the same, and leverage Hong Kong to go out. I still get a lot of requests from mainland company. Of course, the restriction to travel is one problem, but I think post-COVID, I see a big demand in mainland company, especially some new company, unicorns, that they were huge in mainland. But in terms of going out of China, you know, there are things that Hong Kong can do.
Yeah, absolutely. And I think with that also the area here around the Greater Bay Area, I think we're getting a little bit more to the crystal ball questions now, and it's a good follow-on question. I'll let you go first, Duncan, but then Eric, I'm also interested again to get maybe a very clear bet from you that we can look back on in 2 years and see if it was right. So which verticals will be attracting most attention from global investors? So is that biotech here for Hong Kong, or what is it?
You mean for Hong Kong?
Particularly, I think for you here for Hong Kong and the region. So which industry verticals could attract most attention?
Well, I'm back in Web3. So Web3 related, blockchain related company, I think has got huge potential. Fintech, biotech related, I also agreed. Yeah.
Okay, great. Yes, Eric. And I know, I think I had a little bit of a follow-on question from myself that I had prepared for you, which was climate tech, because I think we tried, what was it, 10 years ago with the first, was it Kleiner Perkins who started first, or one of the ones that they may have regretted on going bullish into climate tech? Is it the time for climate tech, or what's your bet?
Well, we're making a bet on it clearly with Wavemaker Impact, and Wavemaker Impact is a bit of a different model for us because it's a venture builder first and foremost with a fund behind it. So we're going to be developing and building 4 companies per year in partnership with very mature entrepreneurs that have fairly succeeded in a previous life, but are looking to do something a little bit more meaningful with their next businesses. And so my colleagues have coined this slogan of 100 by 100, and these are basically companies that we believe can get to $100 million in revenues, and at the same time, by doing so, can also remove 100 megaton worth of carbon in the atmosphere. It's a very ambitious project. Hopefully, we can succeed at it. But the team we have is very determined, very mature in their thinking, and we believe it's a real problem that's worth solving, which is why we're doing it.
Great. So your biggest bet is climate tech or any other vertical or industry sector that you're building?
So we're a bit eclectic at Wavemaker. So we do a lot of different things. And on the generalist investment side of things, I would say that software is still something that we're really passionate about, and we think is going to continue to grow. Specifically on the automation, data, and intelligence platform side. We're firm believers that all these digitization and automation of the world is just beginning and it's early stages. I think we're going to see a huge wave of SMBs that will be automating in the next 10 years or so. We're big fans of small businesses and medium-sized businesses. And while large companies have all been pretty much automated for the last 20, 30 years, I think the next wave of automation will happen in SMBs. So we're big fans of automation, data, and intelligence because they basically unlock productivity, they create insights, and really at the end of the day, done properly, they can create business breakthroughs that can create competitive advantages for these, for not just the SMBs, but also large enterprises.
Fantastic, very good. Actually, I will launch in a few seconds the poll one more time to see if we could convince even more people to be bullish in the venture capital scene moving ahead. But a very 30 seconds answer. There was one more question from the audience. What is the most important element you consider when investing? Eric. The one most important element. I know there are plenty, and I know DD at least takes 100 hours, but yes, the one thing that really moves the needle.
So it's a trust business, right? So we really gauge the integrity of the founder.
Fantastic. Duncan, from your old times, what did you look at?
Same thing, it's the people, the team.
Fantastic. Okay, with that, I think I get the pleasure, right, to launch one more time the poll, and here we go. And yes, well, seems that we have not been doing such a bad job. Well, some people are still more again for stable. Who will join Eric, myself, and Duncan, what he can do from a government point of view on really making sure that we bring more capital more efficiently into the startup scene here in Hong Kong, Southeast Asia, and arguably globally? Very good. I think we're here. We do have a question here. Can we take that one offline? I'm unfortunately bound by the time. We'll need to stop here. We're at the 60%. I think that's good for me. That's the 2/3. So I want to give invite you to give a big hand of applause to our panelists, Duncan, Eric. Thank you so much. What a great pleasure. And
thanks for having me.
Looking forward to seeing you soon again. Thank you. Have a good day.
Thank you. Thanks, guys.
We get a photo, right?
Thank you, Eric, Duncan, and Karena, for your insights again. I'm sure our audience has learned a lot from it. So may I invite you all for a group photo-taking session? Seems like Eric is on screen with us.
Got it.
Perfect. Perfect. This marks the end of the session, and we hope you find this discussion fruitful. If you have any comments and suggestions, please fill in your questionnaire by scanning the QR code on screen. Don't forget to visit our exhibitors' booth on site and online for collaboration opportunities with participants from all over the world. The next session, Artificial Intelligence, Companion or Competitor, will start at 11 a.m. Please stay tuned. Would also like to invite you to our concurrent event, BIP Asia Forum, held at HKCEC Halls 5FG on 1st of December and online on 2nd of December. This year's forum will unlock the full potential of IPs in business value creation through event sessions by 70 plus incredible speakers and cover trending topics on the industrial metaverse, latest IP development, and etc. Together with the debut Innovation and IP Market, a one-stop innovation showcase and networking platform. The forum aims to provide you with new insights on developing new business frontiers. Please return the SI headset to our staff at the room entrance before leaving. Please make sure you take all of your personal belongings, and all items left behind will be removed. Thank you very much, and we wish you a fruitful E-Day. Thank you.
基本法確保咗一國兩制可以行穩致遠，令香港保持獨特地位。
低稅率以及健全嘅基礎建設，亦都令到香港有非常之好嘅營商環境。
香港完善嘅法制，令經濟穩定繁榮。
國安法令社會安定，自然更有利營商環境啦。香港同祖國緊密聯繫，亦都係中國一個面向國際嘅窗口。呢個地位可以話係世界上獨一無二。
基本法第115條保障咗我哋嘅貨物、無形財產，甚至係資本嘅流動自由。
無論係內地或外地企業同香港公司合作，就係雙贏。
我哋香港人有國際視野，產品融合中西文化，靈活運用兩地嘅資源同埋優勢，能夠創造出更加高嘅價值。
做初創有政府支持好重要。我哋喺2016年加入咗數碼港培育計劃，幫助我哋發展得更加成功。
我相信完善嘅金融體系以及法治係非常之適合我哋喺香港建設我哋嘅業務。
喺基本法嘅保障之下，香港喺大灣區開發之中擔任重要角色，可以見香港嘅年輕人機遇良多啊！